Yeah, I mean, it's worth separating the two stories, I think, Shauna, because when you think about what's happening with the Model X, that price cut was made right to come within that cap of the IRA. So that car is, in fact, eligible for the federal subsidies, which makes it a little more affordable, although it's higher than the Model 3 and the Model Y. So that's largely seen as the big motivation behind the cuts there. The Model 3, though, is probably a bigger concern when you consider the Model 3 and Model Y make up such a big chunk of the revenue and deliveries for Tesla. And a lot of investors were expecting that new Model 3 coming out to be at a lower price point, to be able to compete with the BYDs, with the other cars, especially in China, where the competition has been so steep.
There have been quite a lot of interesting news about Tesla in recent times, and we believe that more is still to come. Tesla's track record of exceeding expectations and turning profits has built investor confidence in the company's ability to execute its vision for the future. These are not just speculations, but they're facts based on actual evidence, with numbers backing it all up from the leading automaker. And as we continue on with this video, we're going to explore some of the latest Tesla news and how this is all going to impact Tesla stock in the long term. Let's get started.
Speaking of travel, let's check in on some of the EV makers. Tesla shares riding higher today after data from the Chinese Passenger Car Association showed that Tesla sold over 84,000 EVs throughout China in August. That marks a 9.3% increase from a year ago. Sales of Tesla's China-made Model 3 and Model Y cars rose over 30% from a month earlier. So, this is good news for Tesla, especially considering how much competition is in China that's leading to the pricing wars that we're seeing across the sector. Last week, we saw Tesla once again cut their prices for its Model S and Model X in both the US and China. We'll see how that impacts demand and margins moving forward. But so far, it seems to be so good.
Yeah, and I think the sentiment here, at least more broadly speaking from the street, has been that they're willing to sacrifice some of the pressure that we're seeing on margins, at least in the short term, in order to kind of gain that sale picture, expand the market base, or really, I guess, in this instance, defend their market share, because we know that's such a critical issue here for Tesla, not only in China, but also obviously what's going on here in the U.S. But when you take a look at these sales numbers across the board that we've seen over the last couple of days, Li Auto, a huge competitor to Tesla, the domestic competitor there in China, they delivered nearly 35,000 cars in August, up 663% from a year ago.
Tesla has been trimming its car prices since the start of the year, which impacted its quarterly margins and heightened investors' fears. However, what many fail to understand is that Tesla's strategy of price cuts is aimed at boosting demand to support production levels. Moreover, the price cuts don't hurt the bottom line as badly as some on Wall Street have feared. So, as opposed to what others think, here's Tesla's profit margin, and we're going to show you that it's actually in pretty good condition. Hey guys, welcome back to Tesla Tomorrow. There's no question that Tesla has advantages or tools at its disposal that new and even legacy automakers lack. For instance, Tesla is the only pure-play EV manufacturer that's profitable on a predictable basis, as determined by Generally Accepted Accounting Principles, or GAAP. Already, Tesla has a chance to deliver its fourth consecutive year of GAAP profits in 2023. While, on the other hand, most legacy automakers that appear to be profitable have had their EV divisions decisively losing money and burning cash. If Tesla does continue to manufacture or sell cars, these price cuts will have little or no significant effect on the company in the long run. Before we carry on, if you like this type of content, make sure to hit that like button, subscribe, and turn on post notifications to keep up to date on everything going on with Tesla. Production is already in top gear at Tesla's gigafactories. For instance, the company's Giga Shanghai plant just hit the 2 million cars mark. Tesla Giga Shanghai went into operation in late 2019 after an unprecedentedly quick construction, which started on the 7th of January 2019. Initially, the production concerned only the Model 3, but towards the end of 2020 and early 2021, the Model Y entered production and sales. The factory produced the first million electric cars in August 2022, within 33 months, and now the second million units have just been achieved in just 13 months. At the moment, though, Tesla's cumulative production is currently at about 5 million units, which means that the Shanghai factory is already responsible for 2/5 of all Teslas available today. This Chinese factory was initially focused on the local market, but later it became Tesla's main export hub. supporting surrounding markets as well as in Europe and recently Canada. It is the world's largest all-electric production site, with the installed manufacturing capacity believed to be above 1 million units annually. In fact, Tesla describes the plant's capacity at over 750,000 units annually, even though the data clearly shows that there's significantly more going on there. For instance, more than 935,000 units have been sold locally or exported over the past 12 months. It's also worth noting that Tesla was the first foreign car maker that was allowed to open a wholly owned manufacturing site instead of a 50-50 joint venture in China. This is something that the market is actually ignoring. One other thing that the market is dismissing is the potential for Tesla to license the FSD software to other EV makers. In other words, Tesla's current competitors may become the company's partners. Already, Tesla's superchargers have essentially become the North American standard. Tesla even announced charging deals with companies like GM, Rivian, Volvo, Polestar, Ford, and even Honda. Honda recently announced that it's adopting Tesla's electric vehicle charging connector for its future vehicles, joining all of the holdouts to accept Tesla's winning standard. The auto company is planning to implement Tesla's plug, now known as the North American Charging Standard, or NACS, into all of its vehicles, slated for 2025. Like other manufacturers on board with the NACS, it's also promising the availability of a CS combo to NACS adapter before 2025. So its existing models and soon-to-be released ones will have access to Tesla's vast and reliable charging network. These days, DC charging and fast charging networks that aren't built by Tesla are found to be largely unreliable. So with access to Tesla's supercharger, plus building a new network, future Honda EV owners might have a better time whenever the automaker gets around to releasing them. Tesla's supercharging effort does not stop at just opening its network up to other EVs. It also extends to making more charging stations available globally. For instance, the automaker plans to install 20,000 electric vehicle charging stations across 2,000 Hilton properties in the US, Mexico, and Canada beginning next year. For Tesla, the build-out of wall connectors is one significant way to increase mass adoption, as it will help to offer more convenient charging stations. More people are starting to recognize Tesla's effort towards sustainability and autonomy. A recent Wall Street Journal report claimed that Tesla is building out charging stations cheaper and faster than any of its competition, and its speed and cost advantages have all helped it win millions of dollars in federal grants and establish a key infrastructure advantage as electric vehicles go mainstream. Think about it. 3 out of 5 fast chargers in the United States are in Tesla's network. This shows that the company has a significant head start in the race, which could help solidify its advantage in the growing EV market. Another projection from Piper Sandler stated that Tesla could bring in $885 million in supercharger revenue next year, and $10 billion annually in a decade. This exponential increase in Tesla's market cap and revenue will be the driving force for the stock price in the future, and there is proof of this. Tesla shares have more than doubled this year as investors have responded favorably to its decision to open up its supercharger network to EVs made by other companies, as well as its strategy of cutting and sacrificing some profits in pursuit of market share gains. Therefore, with further gains from superchargers, Tesla's stock price can respond even more positively than it already has. Tesla continues to deliver strong growth as EVs take market share from traditional combustion vehicles. While high expectations are still priced into the electric vehicle stock, Tesla's sales update and reports on its superchargers both show that Tesla still has a long growth runway in front of it. But what do you think? Let us know down below and let us know your valuation of Tesla. And if you want to know more about what Tesla's been up to over the last few days, go ahead and click on this next video on your screen. See you there.